The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman. This is the third day of October, and it's my pleasure to be here Monday through Friday, 11 o'clock until noon Eastern Time. 877-927-6648 is the number to call. And thank you, Steve, for 2 great hours. And, of course, straight after me comes Larry Pesavento, then Daryl Martin. You've got Dave White. You've got Andy Hecht. You've got Tom O'Brien. Wow, what a full house we've got today. Great. So let's just run the market down. Market's down 100. Talking about down. Market's down 114 for the Dow, 13.80 for the S&P. Comp index is down 28 to 37.86. You've got gold down 7. Silver's down 29 cents. Crude oil is down 55. Bonds are only up 10, 30 seconds. Dollar's down 13 ticks. And the euro is up about 0.04. Now, very important. I want to get these out. I've spoken about some of them before. I'm going to talk about it again. Isn't it remarkable how we have not heard anything about the 1%ers? Do you understand? If you learn how to identify trends, and you remember what we were talking about yesterday, was it that I was showing those peak Ds and Fs that were the turn of the trends and the charts that I was following? If you understand how media works, if you understand how the conflagration of various points of view, I wish I could do this, and I do know a way of doing it, but I haven't actually followed up on it. If I could get a word count on the number of times certain words were used, and I could just chart those words, I'm pretty sure that I would get to a D, E, or F peak, and that would be it. And then you would not hear about it again for a very long time. So please understand, in the politics that we're listening to, first of all, number one, and I consider this absolutely key, if you don't know this, it's to your disadvantage. Remember, politicians are their modus operandi since they were little kids. That's why they've become these politicians, other than the fact you've really got to have that thick hair. If you're a male, you've got to have that thick hair, turning maybe a little bit white, but thick. Then you become a senator or a congressman. Most of the time, I would say 90-something% of the time. Also, now it means that you should be a millionaire or much, much more before you can go. Let's just put that aside. The modus operandi is to know specifically what you want, but to keep talking about something else. That way, you obfuscate. You are the perfect, what are those little the shell game, the guys that used to see them on the street corners of every city, and they had those 3 shells with the little P underneath. You've got to learn how to wave your hand over here while the other hand is doing exactly what you want. That's what we're watching. And if you think this is to do with what you think it has to do with, think again. You will only find out what the real gist is in a year or 2 or 3. Now, along that particular aspect, then we'll get into the market. There's really nothing much to say. We've got 3/4 Monty, thank you. We've got a sell signal that's gone to a sell mode. My newsletter was mostly short. Let's just see how that plays out. We'll talk about the VIX, etc. a little later on. There's nothing to do. The shell game is going on. Now, for those of you who are going to go to the front page of the affordable health care. You remember it was called Obamacare, but it's only called Obamacare under certain conditions. It's called affordable health care where things are going against the plan. Then you want to talk about affordable health care. You don't want to have it Obamacare. Now, I'm not even sure how it got to be called Obamacare. What a title. Now, that's a title that in years to come, like Social Security and all the other things, whatever it is now, whatever the cost factor is now, as sure as I'm sitting here, and long after I'm not sitting here, it will multiply exponentially. If it starts off with 7 million people, it'll expand to 36 million people, and then it'll expand to X number of dollars, and then it'll expand to certain level of income, and then and eventually it permeates everything. Okay? So that's the big thing. So I want to go back to talking about the 1%ers. I'd spoken about this a long time ago, and I said, why are they talking about the 1%ers? If you want, sure, you can talk about the 1%ers as much as you want. If you're talking about income, talk about the 1%ers of people that have government jobs that have been retiring or are going to retire with 80, 60, 90% in some cases of their best 3 years of income, and you know how that's always fixed with overtime and everything, right? You tell me how you can earn between $50,000 and $120,000. How much money do you think you need if you were going to put that into anything at this particular time? You put it into real estate, look at your risks if there's a huge down move. You can't get out of real estate quickly. I always talk about this. There's a whole generation here that's never ever heard of homeowners begging people to come and look at their places because it's down 50%, 80% or more. Sometimes they're so in hock that they just have to give it away. You haven't got people wanting to take it, like in certain periods of 1970s, absolutely in 82, 83, certainly here in the Northeast. So find me, just how much money do you think you need to earn an income, whether it's after or before taxes, I don't really care, of between 50 and 120,000 in your retirement? 1 million? 2 million? 3 million? You can do the numbers. Look at the yields. Right now, the yields are, long-term charts, 3.694% on the 30-year, 2.6% on the 10-year, 1.36 on the 5-year. You tell me who the 1%ers are. Now, if that was the plan, if that's what the contracts were signed for, there's really nothing you can do about it. But to keep this as an ongoing thing, I think is disastrous. So I got that out the way. Here's another thing I wanted to talk about. If anyone is going in for the plan, the Affordable Health Care Plan, if you need to do that, I suspect that if you, with the government wanting to absolutely to create the most number of participants, I would not be surprised if you could get a deal like on the lots, like in Florida real estate, when Len from Cape Coral was selling all his fantastic properties that he bought in 1983, 84, and buying them back a couple of months later for the same amount of money after taking huge gains, buying them from the same banks, in fact, buying them back. When I saw him in December of 2008, I said, "Hi, Len, how are things going?" He said, I sold. You remember we talked about selling? I sold. Now I'm buying like I've never bought before. So that's one thing. So I'm suspecting, and look at the gains. That's fantastic. Congrats to Len. So in the affordable healthcare, I suspect they're giving away plans now that if you can get in with a plan that maybe costs you more than you would like to spend, but it gives you an incredible array of benefits, you could be grandfathered in when this finally kicks in, and all of a sudden they start to make stricter rules. They find out what works, what doesn't work, what the heck were we giving away. The giveaways right now must be unbelievable because the government is desperate for participants. Let me say that again. The government is desperate to create the numbers. So look into it. All right, enough. So let's go through the market. Here we are. We're going to the Dow, and one of the reasons why I spent a lot of time in this particular chart, This is the chart of the Dow, the high of the 2nd of August. I've spent time here on my show talking about this. The high that was made on August the 2nd in the Dow, 15,658, had, I think it was 18 down days before it made the 14,760 low on the 28th. Oh, yeah, that makes sense. Day 11 was yesterday. Day 11 was yesterday. And day 11 is today. Day 11 that matched the pattern that I was looking at was a fairly strong down day. Nothing like yesterday. Oh, I was relating one day behind. So today is the 11th day. There it is. 11 is right there. And that was on the 19th of August. It was followed the next day by a candle, quite kind of some people would have considered that a bullish candle, but you always have to go to the next day's candle. And that was followed by a very ugly session. Look what we've done on the 11th day here. We are down 140 points. The day is young. The MACD is expanding. The stochastics at 13%. You remember I said I'm anticipating, and I need to add this. From listening to whatever, periodically, if I happen to listen to CNBC or Bloomberg or any one of the shows or read commentary or go to IBD, I'm suspecting that there are very, 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 very few people that are actually short at this particular time. Because of the whippiness, when they went short, they got taken out and they didn't get back in. But then when they did get back in, the market whipped them around again. This is my suspicion, that this move has to be taken very seriously. Why? Because of all the different factors. Now let me go through the factors. I had some questions about it, and then we're going to go to some questions I had in the den, and then the questions that was asked of me yesterday I didn't have a chance to do anything with, although I emailed my subscriber back, and it was on the queues. So let's go through this. Here's the E-mini. Left side has the daily. I'm going to skip the weekly for the moment. It does have a peak C, but it could be an alternate count peak G. So I need to just leave that for the moment. Here is the 1666.75 low of October. I should know these. Oh, September the 30th. Runs up to peak A, B, C, D, E. Peak E at 16, around about 1693 or something, turns around, comes back down, and where are we? We've just gone to 1670.25. We are still above that low, making an arch formation, number one. Number two is, let me go through these different indexes. Let me get rid of the 120-minute chart, and let me go through them, because now we're getting clarity. You remember the IWM? I said in my wave count, there's a certain technique that I use. It's called the phantom peak. I teach that in my Master Trader series. I discuss that in my newsletter, the opening call. It is imperative that you have strict discipline. But if you break the discipline, you can only do it if you go to specific criteria. I'll be right back. Basil Chapman, Tiger Technicians Hour, Dow's down 134.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, Basil Chapman, Tiger Technicians Hour. Let me just do a couple of things here. Just a real quick answer. Yes, we do have. It's only a form of it. It's really quite different, but it is a form of Obamacare here in Massachusetts, and it really depends on the physician. My wife is one of the old-fashioned physicians that takes a lot of time with each patient, which means you wait a long time. Probably I wouldn't even go to her because you have to wait so long. No, she's really good, and she thinks it's working, and but she has a little different perspective. She says it's working, but she doesn't look at it as a financial working, just that she thinks it's working. So, and now let me just do a quick other thing here. Herbalife, isn't it interesting that Ackerman started to do all this ameliorating his loss in Herbalife right as a peak E is being formed? Everything about it is technically very poor. The peak E, right arm extension, is almost like a rogue wave that occurred in the daily. If it goes underneath, if Herbalife goes underneath 66.92, there's a really good chance that 65.48, the 9-period exponential moving average, excuse me, in the weekly chart will be taken out, and I would then have a target of at least 61 to 55. If 55 gets taken, 61 to 57. 57 gets taken out. 55 will be really important. I wouldn't be surprised if it starts a pretty decent pullback right here. So let's go to a couple of different things. I said I would look at, questions in the debt. The first one was, let me just go through this one at a time. Would I look at, what was the name of that stock? Go, right there. RVLT. RVLT is Revolution Lighting Technology Inc. I don't know what it does. Now, this is very interesting because it made a very strong peak AB, and then went to C and it's pulled back. It looks like it wants to make a D and it's holding very well. It will fail if it breaks under 311. It's a 3.59 right now. I think at any moment you could have a little spike, and if it does, it'll get above 396 for leg D, RVLT, trading at $3.59.12, $3.59. And then you've got to be careful because it'll set up a big rectangle formation, and it could take a little while before it moves again. I'm a little concerned in the weekly chart that, yeah, it is very good, but it really needs to hold in the $4.03 to $4.15 area, about for 1 week at a time. So this week maybe, or next week, if it does that, then all of a sudden the monthly kicks in and says, you know what, this could even get to a leg C, and that would be above 550. I love the chart, did a little work on it, was mentioned yesterday, did a little work on it, and as I see it right now, I just wanted to see the lows, 219, 220, I thought so. So this is A, and this is leg B up in the gray A and gray B in the weekly chart. Hey, good eye. I like it. That was a request by Mike Mack. Now, let's go on. And the next question was away. Boy, if this is taking off. We have some fabulous people in the debt. A lot of folks that just really, they do their homework and they mention stocks. Great eye, great calls. The one we've got here that I'm looking at is in the den. This is Away, AWAY. It's HomeAway Inc., online marketplace for rentals in 168 plus countries. Cointrees, it actually looks right, Cointrees, because it looks like it's coining money, at least lately. Now, it had a peak E-top, plummeted down from the 30, around about the 32.5 area down to the 27.5 area. Big spike today, up 2.57. Now, there are some stocks that have this tendency to have really big spikes. We've got one today that's up 4.6% right now. It also means that it's up about 180% in our portfolio from the entry price in my opening call. And that's exactly what I keep insisting. Look at individual stocks. If they are acting well in this market, they are telling you they have the gumption. They are the salmon that are going upstream to spawn. They are not going downstream with the tide. That's what you want. Boy, I like that analogy. Now let's look at something else. Now, in this particular market, I believe it's important, once again, to look at the metrics, to look at whatever techniques you use. In the Chapman, so Away, let me get back to Away. This is a typical one because it's trying to fill that big gap from the 25th of September at 30.46 was the low, and then 29.70 was the high the next day on the 26th, next market day. Now it's filling the gap. My suspicion is if we try this test 29.34, it's at 30.03. That area is the 200-period moving average support. If it does, and it moves higher, it'll fill the gap and get to the candle on the 25th. Good eye. I'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. We're back. Dow was down 144 just now. Now it's down 134. S&P's down 16. Now they're in sync. That's the way I like it. Dow's down 0.89. S&P's down 0.95%. I like that disparity. Slight. I like the percentage to be greater up or down in the S&P than they're in harmony. Now, my thinking along the lines that we've had as I read it, just from experience. I don't do any scientific study or anything. Just, sometimes you add things up in your mind because it just fits, and sometimes right, sometimes it's wrong. But my thinking, at least in the shorter term, is that only a little bit 2 days ago and a little bit at the close yesterday, but today is the first time that I think that fund managers and hedge fund managers who were buying the dips are now saying, uh-oh, and the Dow's down under 15,000, so it's 700 points off the high, and only now are they beginning to say, uh-oh. So my suspicion, and it's only a suspicion, is that it has nothing to do. It's just, I speak about this all the time, and I mention this to my subscribers. Until you get a headline, you cannot get a sustained move to the downside. And it has to be a negative headline that almost every hour of the day, not every day, but it's almost every hour of the day, bad news filters or news is perceived as being bad. Now, I wanted to show this chart, my CD introducing the Chapman Wave methodology. It shows and you can see it very clearly. You can see the price moving up, but the red line is moving down because the arrow is pointing down. And it says shorting all the way up. Uh-oh, wrong trend. And then it shows a high, and prices making lower lows and lower highs with bounces, those scallops, the H pattern that I talk about that fails, all the way down. And then it says, and that's a green line. So the red line should have been, that's going down, right? But the price is going up. Now the green line is going up, pointing up, but the price is moving down. And it says, buying all the way down. Uh-oh, wrong trend. This is the trend you want. Whoops, right there. And look what happens. Not only does it look correct, green line, it doesn't mean to say if you aren't a really good short trader, you can take the swing trades and short. Hey, I'm not saying that. I'm saying the tide, the trend is moving up. Why? Look at the MACD, the fast-moving average, that little thin gray line there. It is moving up. Look at the way it is down. It even feels wrong if you were going the opposite way. That's going to save you. If you go short and you were wrong because you're a little bit, you go short here and it bounces, depends on your stops, of course, but you will eventually be proved right if you get the tide right. And that's the reason why I've been saying over and over for the last week or so, we are now biased more towards the short side. I mean, we actually bought the volatility index twice already. These are big moves, up 11% just today alone on the particular index that we have. I want that at this particular point. That's the way I want to trade. I want to trade the trend. Okay, got that out the way. Now here's something else, the Qs. Remember I spoke about the Qs? Said making a possible peak E if there's a lower high bar today. So not only a lower high so far today, but 79.72 was the high on the first. Fractionally higher, 79.76 yesterday. And today's high, it still denied that there was anything going on, was 79.72. Parallel highs with 2 days ago. That is a technique that I talk about. It is called the 2-bar reversal. How long it stays, that's something completely different. But I'm watching it. Why? Because this is a potential leg D in the weekly chart of the Qs. In the Dow, it is a potential, it's not a potential anymore. It is, in fact, a peak E. And it absolutely is a peak E now. Yes, it's got the Groucho Marx eyebrows reversal. But if, in fact, the Dow takes that 14,760 in the next week or so, that's going to say, watch out, because 14,551, the low of the 28th, week of the 28th of June, will be a target. How about the IWM? IWM right now is trading only down 1.35, down 1.26% at 106.04. But no, that's not good enough for me. I spoke about this, and I needed that relationship. I needed the root to give me a proper D, and that's what we got. Yesterday, there was a slightly higher high, 1087.39 in the actual Russell 2000 index itself. Today's high, 87.39, 81.79. That's different to the IWM. And look what's happening. The MACD is just about across negative. Stochastic is still good at 84%, but turning down. But I made a big deal about the difference. I'll go back to the IWM because most of you look more at the IWM than you do at the Russell 2000 index itself. Look at the discrepancy between these two lines here. Could this be peak G coming up for if there's a lower high bar next week and not leg C? I don't know. I don't really care at this particular point. I'm going from one time frame to the other. And the daily says, be careful. If it closes down here, it's close to a sell signal, but I really need the stochastic to be under 80%. So a close certainly below 105.24, the low of a few days ago. Absolutely, not only becomes a sell signal, it becomes a sell mode immediately. That's more. That says we're going down deeper. In the buy signal to buy mode in the Chapman wave, on the upside, you expect at least a D, but on the downside, it's very different. You do absolutely want to count the troughs. You want to count the legs to the downside. This is leg A. But more importantly, you also look at the technicals. For some reason, I've done enough studying of this. I'm going to talk about studies. I don't believe that you can take something that you've worked on, and people tend to do this, for a look-back period, and then you say, oh my God, what an unbelievable indicator this is, and then you do like a week or two of studying with it, and then you say, that is the indicator. If you do that, you are doomed to failure, as sure as I'm talking about my experiences. Why? Because you need to do it. I wait maybe 6 months, sometimes even longer. I try to trade it. I try to do everything I can in real time, because it's real time. Looking back, everybody's a genius. Try real time. You know how hard it was for me to stick, and I have no idea if it's going to work, with a short position I discussed yesterday in the IBB. That is the iShares Nasdaq Biotechnology. We hit the exact top tick to short it last time at peak E at 212.50. Was within maybe 2-3 ticks. Actually, it was the exact tick of the short that we chose to use. And what happened was it pulled back very sharply, but then it came right back. Why? This is the sector that constantly sees buying by fund managers. It's the one that goes flying higher when the moment there's strength. But wait a minute. Now, when Alex called me yesterday and spoke about this and said that he's in a long-term position, that's something completely different. I'm trying in the Chapman Wave methodology to do the timing. I said that the price that it reached right there at 212.50 on the 19th of September had much higher technicals than at this next, what I'm calling peak F, at 213.78. Look at the technicals. It's deflecting low in the MACD. Stochastic still very strong, but the on-balance volume is turning down. The relative strength, where did it disappear to? Hey, relative strength, where are you? I'm not seeing it there for some reason. Oh, there it is. Relative strength already gave the sell signal incorrectly way back at 212.50. The on-balance volume correctly went to a slightly higher high. That's why I used the two together for years. Now, I spoke to Alex and I said, there's another signal. Not only could this be peak F, and everything about the stocks themselves is saying this is probably a peak F, but there's a candle that I developed years ago and spent a lot of time on it, and then I had a webinar after about 6 or 8 months or 9 months of really working at it intensely. I called the webinar Silent Candles, candles like round numbers, candles that are a certain particular pattern in the candle. And this is the silent doji I spoke to Alex about yesterday. And I said, this is where you got to be most careful. You remember when I was looking at Tesla with our caller Travis the other day? Travis, I said, right here at the resistance at 194.23 is your best risk to reward opportunity to short or to buy the puts on Tesla. Well, I got an email from him and he bought the puts and he made a fortune. He got out yesterday. Of course, he could have held him, but what's the difference? He made a fabulous amount of money. That's because it was in leg D, going to peak D, right into the resistance, right there. It's got the trend line support that it's trying to come to. This is the Chapman Wave inside track. First, this is the green line I will put in. I'll put the red line in here. New parallel. Put the red line in right there. And I said if it moves, it's going to move in 20-point, 15, 20-point increments. Today's down 10. I don't care about that news about the, I mean, that's an incidental thing. Very unfortunate, but with the battery catching in line. Yeah, it is an issue. And in the old days, if you read about it, automobiles used to catch a light as well with the gasoline and everything. So I'm looking at this and I'm saying, here's the 50. Let me double check. I think it's 32. The 32 period moving average right there is testing it. But I would not be surprised if Tesla is in a leg G/C, having made an instant restart. But G is what in my Master Trader series, I spent a lot of time talking about the MACD's fast moving average as it relates to the instant restart, Chapman Wave instant restart, and how you can gauge that in certain instances you've got to expect no more than a G, and in other instances you can expect an instant restart that can go not only to another buy mode D, E, but even an F. And right now we're looking at an instance where G could be the top and E in the monthly. Tesla could be in for a deeper slide and a longer-term slide. So I wanted to get that out of the way. Let's go to Brent in Martinez. I think it's in California. I think it's in California. Is that right? Hi, Brent. How are you?
I'm doing well. How you doing, Basil?
Good. Yeah, that's great. It's California, right?
Yes, it is. It's
yes.
I think you asked me before. Yeah, it kind of has a lot of history to it. It's that's where John Muir lived for a lot of his life, and the martini was invented there. This has got some kind of quirky things about it.
Oh, okay, good. So this is how far from where? From San Francisco, or?
It's east of San Francisco, about 20, 25 miles.
Oh, okay. Gee, I wonder if I've driven by it. Anyway, great. Sounds fascinating. You wanted to look at?
Micron Technology, MU.
Okay. Do you have a position in it?
I don't. I've been watching it for a while. It's been climbing up here. It looked like as it's hitting these highs, the technicals might be weakening a little bit, so I just wanted your opinion on it.
You know, I've looked at this chart, and every single thing I looked at says it's a buy, and yet in my mind, my mind's eye got in the way, and I kept saying, wait a minute, computers are just a pure commodity. How on earth could Micron, which I used to have years ago, I don't have a Micron anymore, how could it be doing so well in this environment? Dell's struggling. I just didn't understand it, and to tell you the truth, I have still no idea. I don't know how they do it, but I have to tell you something. This is one time, I should say, this is another time, not one time. This is another time that just following the market would have been the best thing, because it's walked the 9-period moving average in the daily chart from the lowest buy signal way down to the silent doji, and the low was 13.05 on the 27th of August, gone peak ABCD. I'm not sure if this is EFG. This is the one case where everything about it says it should be G, but there could in fact be one more pop up to go to a D, and then it's a leg D in the weekly. But it is a fabulous looking chart, and I don't understand it. They must be doing very well. In the den, I think this is referring to MU. The Peaky says supply must have dried up. All I can say is that people still need computers, and whatever they're doing, Micron Technology seems to be doing really well in their sector. Memory supply, maybe it's memory supply. I don't know. All I'm saying is...
can I tell you something real quick, Basil?
Yes, please.
Yeah, I listened to David White. I guess there was one of the big distributors of the same product that they manufacture. I think it's in Taiwan, had a fire. And so that obviously disrupted the supply.
Oh.
And so that's why the thing's going back. I think it's 2 or 3 weeks. You'll see a big pop up around from $14 up. That's the start of the whole run there. So,
well, Dave, let me just mention to folks, Dave White is our technology expert. Not only that, he has fabulous newsletters, so check Dave out. And also he has a power vector indicator, does fabulous work. And Dave is the one that put together, using the core of Thomas' methodology, the art of timing the charts, and a fabulous program that we have here at TFNN. So I'm going to do a little bit more work on MU, Micron Technology, trading at 17.55, down only 12 cents. And we'll figure out what's going on here, what we should do. And I'll be back with Brent in Martinez, California, the home of the martini. I'll be right back.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, and long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position, subscribers sold recently for plus 42% on parts and plus 64% on rest. And Hertz Global as a core position for 6 months. A current position, entered as a turnaround company, is trading over 100% of its entry point as a portion sold earlier for a plus 21% gain. Subscribers to the opening call see the Chapman Wave techniques demonstrated and explained daily to also educate investors. Now you can get a free 2-week trial. Basil Chapman's newsletter, The Opening Call. Just visit the front page of TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Dow's down 161, S&P's down 20, and in fact, we're looking at some very interesting things. We're on with Brenton Martinez. You know, I did quite a little bit of work in terms of looking at the chart formations. I think the upside is limited. I'm going to ask you to do a special favor for me and for you. If you have time, call into Dave's show at 2 o'clock Eastern Time. Ask him a little bit about Micron technology. My suspicion is that whatever whatever was going on might be almost over. It's in leg D in the weekly, leg D in the monthly. It had a spectacular move. I'm calling it G in the daily. It's gone right back to the previous major high, which was peak A, B, C, D, back at the doji high in the monthly back in September of 06 at 1865. I was going to say to you, I see no more than about 1850 to the upside. Now that I'm looking at that previous high, this is the period of strongest resistance. I'm going to say leave it, but why not give Dave a call just to ask? Because what I would say is if it's going to be an ongoing situation, between 1620 and 1550 would be your entry point for a position. So I hope that helps you, Brent. Yeah, I was actually looking to short it, but no, I really appreciate it. Short it. If you were going if you're going to short it right here with a stop at $18.14, so 60 cents on a small position. If it takes out in the next 3 days, if it takes out 1674, let it bounce just a tad, and you could repeat that with another small position with a much tighter stop. Reason being, I think it will be going down. If it fails and goes under 17 at any point in the next 2 days, I think it's going to go down to the 16-ish, maybe even hit the 1585 level of the 9-period moving average in the weekly. But your risk is just $18.14, and you're out.
All right. Thank you very much, Basil. I appreciate it.
And just a very small position, because it has been one of the strongest stocks. But still call Dave. Call Dave to find out. Thank you so much for it. Okay, folks, let's just do this. A couple of things I need to get to. You remember the volatility index? You remember all that work I did on the volatility index in my daily newsletter? This is what I was explaining, that there should be a leg D up, and there it is in the 120-minute chart. It's leg C down in the Dow, and is now leg C. It wasn't before, but it's leg C down in the S&P. But most importantly, look at this. The bonds are the yields are down 24, 30 seconds. Bonds are trying to rally, but it's a peak D in the weekly in the bond yields. Now look at this. Here is the is the daily VIX index, and it was down here this morning. And I said I'm anticipating that we will get a leg C up above $17.50. Not only have we got that, but it's leg C, and there really should be a leg D to the upside. Once the volatility index kicks in, it's really hard to stop it from going down. It's going to be just a spectacular bout of political news that says, oh, everything's fine, which we know it won't be, because this is going to be ongoing for a little bit. Now I'm looking at this, and it says, on a left side, right side price time match, I'm not going to even talk about that. I'm doing one thing at a time. Let's just say this is leg C, and I am expecting a leg D in the volatility index, which is up 1.83, up 11% at 18.43. So now what's very important about this particular chart is we're going to look to see if there's a pattern that I was looking at in wood, W-O-O-D. This is the iShares Global Timber and Forestry ETF. If it fails from here, it makes a double top formation at E. But only it's at 49.59. WOOD is a symbol, trading at 49.59 minus 76. It needs to take out 46.63, and it's a weekly chart. So I don't know if that's going to happen. But most importantly is the housing sector. I've been very skeptical about this last move in the housing sector. Watch out. Now, I had a quick question. Would I look at bonds? Did I do the Qs? Yeah, the Qs are making a peak E. Let me go to the TLT. The TLT is rallying. Most importantly, what you want to see in the TLT is for it at a 106.33. It needs to decisively break into the 108.22 area. Then 109.72, the 200-period exponential moving average, becomes the target. So, in sum, we are short, we're remaining short, we're looking for lower prices, higher VIX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.